Welcome to the Stocks on the Rocks show. Whether you like it neat, on the rocks, chilled, or warm, everybody's happier when there's money in their account and a drink in their glass. Let's get started. Hey everybody, welcome to another edition of Stocks on the Rocks, where we do two of my favorite things. We talk about a spirit and we talk about a stock. I mean, what can be better? We're talking about stocks while we're drinking a spirit, and today we're talking Blade and Bow. So Blade and Bow is going to be our spirit of choice. And the stock, since we're talking about a spirit that goes through an aging process where they mix many things together, we're going to talk about Goldman Sachs, because Goldman Sachs has been known to mix many things together. If you are new to the channel, do me a favor, hit the subscribe button, smash the notification bell so that you get the alerts as they happen. And then if you are a regular, do me a favor, in that little comment section down below, tell me what stock you'd like to see us analyze and what spirit you'd like to see us analyze. So today we're doing Blade and Bow. Now this one, interestingly, the first time I had it was at a Christmas party. And it was not the first drink I had that night. And I remembered having it, and I thought, wow, this is a really tasty bourbon, and I really enjoyed it. And so I thought I would get myself a bottle. Now it retails for about $60 a bottle, so it's on the higher end of bottles. And one of the claims to fame is that it is from a very famous Kentucky distillery. So the Stitzel-Weller distillery closed over 20 years ago. And Blade and Bow went in, and they now distill in the Kentucky Stitzel-Weller distillery. And this one, they use a process to age it called a Solera aging process. So the Solera aging process, essentially what they do is they take some of the older whiskey, and they say that they still have whiskey left from the Stitzel-Weller distillery that then gets mixed into the younger whiskey. So in a Solera aging process, what you get is you get a blend of older 20-year-old whiskeys with some of the newer ones. And so that's what we have with Blade and Bow. Now the thing I like about it, immediately on the nose, you get kind of a toasted cereal smell with kind of like, everybody kind of cringes when I say prunes, but prunes are just dried fruit, right? But I get kind of a prune and an apricot, dried apricot smell. I really like it. It's a good one. Now you notice today I put it on the rocks. I mean, this is Stocks on the Rocks overall. I like it better on the rocks. So some of them I like better neat. This one I like better on the rocks. I think that a little bit of the water coming off the ice opens it up a little bit. I do one big cube when I do on the rocks with a drink. And when you taste this, immediately you get kind of that, it's almost like delicious Cheerios. You get that toasted cereal note, followed by a sweetness of kind of like it almost tastes like popcorn. Like caramel popcorn, a little bit of a caramel popcorn flavor. So I really enjoy this one. I think this is a really good sipping whiskey. I think the price point might be a little high for some people, but the Solera aging is something that's really unique to this bourbon. How much of that 20-year bourbon is left in this bottle? I don't really know. Now it's called Blade and Bow, which I find really interesting because it's that old distillery. Stitzel-Weller. They had 5 keys hanging, and so they've got a little key here on the bottle, and the blade of the key is this part, and the bow is the top, and that's why it's called Blade and Bow, and it's named for the 5 keys that hung at the distillery. And the 5 keys represented what makes really great bourbon: grains, yeast, fermentation, distillation, and aging. So it's got a little bit of history to it as well, which I kind of like that about it. So if you want a decent sipping whiskey, I think this is a good one. Might be a little pricey for some, but I think it's worth the money. It's a special occasion kind of bottle. I don't typically buy $60 bottles of whiskey. I like to stay in the $40 range, but this one is coming in at, what is it, 94 proof? 91 proof. So it's a 91 proof, but it's not overly powerful on that 91 proof. I think that something like an Elijah Craig, which is a 94 proof, has a lot more alcohol flavor to it. So I don't get the ethanol in the 91 proof here that I do in something like an Elijah Craig, which is a 94. So Good one. I think it's overall a good one. And it's got a lot of sweet notes as I kind of keep it going. So I'm going to continue to enjoy my wee dram while we talk a little bit about Goldman Sachs. And I thought I would talk about Goldman Sachs today, primarily because, I thought about this blade and bow and aging and things that are mixed. And when I think about mix, I think about conglomerates, I think about companies coming together. And Goldman Sachs is, to me, a really, really interesting company. Now, I will say this, Goldman Sachs is painted in the media as the evil financial empire, right? You very rarely hear people saying great things about Goldman Sachs. Whenever I hear people talk about Goldman Sachs, they talk about corporate greed and the bad. I in reading and doing some research for this video, I really, read about the founder of Goldman Sachs. So Marcus Goldman moved to New York in the 1840s. From Philadelphia with his 5 children, and he was an entrepreneur. And what I loved about this is his entrepreneurial spirit. What he did was he built a lot of relationships with a lot of the local vendors, jewelers, tanners, and he went to them and he said, hey, I can go to the banks for you and provide you with short-term financing. So what he would do is he would be the liaison between the companies that needed short-term financing and the banks that were willing to give the loans. And because he had a really good knack for creditworthiness, he knew which people would pay back the loans. And he took a little piece off of each one. Essentially, it was buying and selling notes is essentially what he was doing way back in the 1840s. Now, I think his first year, they said he transacted like $5 million worth of paper. Well, $5 million in the 1840s is like $150 million today. So he transacted millions of dollars in his first year just putting together buyers and sellers. And that's really the foundation of Goldman Sachs and has been kind of forever. Now, they're a gigantic organization now, a $75 billion company by market cap, and they make their money in a lot of different ways. First of all, they offer advice. And they offer advice not just to individual investors, but also to companies that are looking for mergers and acquisitions. They finance individual government. They finance governments for projects. So roads, bridges, tollways, city halls. They'll finance state, local, and city governments and even countries in order to kind of keep them moving. They also have enough capital that they provide liquidity to the market. So they support the market overall, along with making their own trades and managing. So they've got a lot of different revenue streams. And when you look at what Goldman Sachs does, those revenue streams have created essentially a monster of a company and a monster of an organization. Now, back in the credit collapse, if you will, the financial crisis, they switched to a bank holding company, right? So they could be a little bit more competitive in their position, but also so they could receive the bailout. And, Bear Stearns, Lehman Brothers, they went out, but Goldman Sachs was able to stay in, and part of it was because of the way that they positioned themselves. And they came back kind of stronger than ever. And so they recently, just announced a third quarter earnings report, and they missed on that third quarter earnings report. Now, a large part of the reason why they missed on that third quarter earnings report was because they had invested a lot of money in infrastructure. And some of that infrastructure was really longer term obligations that they were trying to create another line of business. They actually just partnered with Apple to launch the Apple Card, the new credit card from Apple, and that has been, Goldman Sachs is touting that as the most successful credit card launch ever. So from a fundamental perspective, just looking at the pure fundamentals, Goldman Sachs is still making money. Their sales are down just a little bit quarter over quarter, and their earnings just recently missed. But I think the real story of Goldman Sachs is to look at the technicals. And I always go back to the technicals because price tells a story. And what is the story of price telling us in Goldman Sachs? So let's first start by looking at the monthly chart. When we look at this monthly chart, what is it that I see? Okay, so looking at this monthly chart, what I see is that we have seen price rally, and we rallied as high as $275 a share. Now we've come down a little bit since then, but I get a better picture looking here at this weekly chart. So take a look at the weekly while I take my sip of Blade and Bow. So when I look at the weekly chart, what I see is that we're down off of our 275 high, but we're kind of in a range, and we're range bound, where we've hit our level of supply up above us, and you see those upper wicks inside of those weekly candlesticks where we've hit a couple of times. And I have a level of demand down below us. Now, a lot of people would call this support and resistance, right? Areas where prices moved from in the past. Well, one of the things that I'm looking at is now I go to a slightly smaller time frame, and I say, what does it look like on a daily chart? Okay? Now, the daily chart, when I go and look at it on the daily time period, we're sitting right above the 200 period moving average. The 200-day moving average is oftentimes called the line in the sand. It's an important line of distinction for equities. Now, when the market is above that line, markets typically tend to rally. When it's below, they tend to fall. Well, we're sitting right on that 200 period moving average in an area of consolidation. Now, if this demand area breaks, if we're not able to hold on to prices at this level, which it's going to be very dependent on what the rest of the US markets do, but if we're not able to hold on at this levels, I think we could see price fall. So let's go back to the weekly chart for a minute. And when I go back to the weekly chart, we've got an area down here that I believe makes a pretty good long-term price target for Goldman Sachs. So taking a look at this area highlighted in yellow, we see an area that was the origin of a very strong rally in price. And this origin of the very strong rally in price tells me that there were buyers at this level. And the buyers that existed at this level, they were able to drive price higher. Now, when they drive price higher, not every buyer gets filled. And as a matter of fact, there's still going to be more orders in that area that want to get filled. So I think that this becomes a magnet for price. Now, combine that with the fact that we're sitting just above the 200 period moving average at a demand area in a point where we see that yields are very low. Now, the yields being very low is an important part of this, because with the yields as low as they are, it slows down the return that Goldman Sachs might receive on their next earnings. They just missed the third quarter. Will they miss again in the fourth quarter? Now, if they miss again in the fourth quarter, I think that we could see a pretty decent pullback in Goldman Sachs, and I think that this price target becomes a pretty good area. So what am I looking for? I'm looking for an opportunity to say, maybe I can take a put and take a longer term put option and ride price down until we get into that region. And that's a very low risk way of getting into the position. The options, now obviously they're not right for every investor. Make sure that you understand how options work. We've got some very basic introductory options classes at tradersarmy.com. Feel free to go visit and peruse and see if it makes sense to learn more about options. But the put option might give you a way to play the market to the downside so that you can actually profit as the market goes down instead of just watching it drop. I'm not overly bullish. I think that if you're long Goldman Sachs, I think it might be a decent opportunity to put a line in the sand where you say, you know what, this is where I'm going to get out. And if it goes down, just get out to protect yourself. There's the dividend that it pays may not be worth the amount that it can fall. So hopefully that makes sense to everybody, but I'd love to hear your thoughts. What do you think Goldman Sachs is going to do? Leave your comments down below. Also, do you like Blade and Bow? Is this a wee dram that you've had before? What are your thoughts on Blade and Bow? And if you've got something you want me to review, put it also in the comment section down below. Until next week, everybody, cheers.